Today's part with the following interruption for a public service announcement.
Welcome to the Investing in Intelligence show, where we talk about artificial intelligence companies, stocks, and trading. I'm James, here with my co-host Kai, and today we'll be talking about Qualcomm. I want to remind you that the opinions expressed on this show are just that, opinions. They should not be taken as specific advice to invest in a particular way. So yeah, Kai, it looks like we took a bit of a summer break. It's always convenient to take a summer break when tech stocks are crashing, when AI stocks are down. Good time to just take a summer break, not have to account for things you've recommended that are tumbling downwards. And then on a day like today, when things are way up and recovering, let's come back. Good to be back, right?
Good to be back, James. Yeah, the month of July started off really well. As you know, I was traveling. I expected something to kind of happen in early July, but it never happened. And you and I talked, and I had the thought of being like, hey, you got to know when to fold them. You got to know when to hold them. Although I was doing work and outside and I had paint all over me, and I called you up and I was like, what is going on right now? Huge rotation. But let's talk about that later. What I wanted to discuss with you, we've had like an all-star week of earnings this week. We have Apple, Amazon tomorrow. We had Meta, Qualcomm today. We had Starbucks, McDonald's. I mean, the who's who of earnings, not only AI, but and tech stocks, but also other stocks as well. A lot of consumer numbers. The Fed meeting today. Friday, we have a lot of oil and gas. I think Chevron's on for Friday. So let's talk about Qualcomm. Qualcomm, after the bell, posted earnings. What does Qualcomm do? Tell us a little bit about Qualcomm and give us the rundown on the earnings call or some of those numbers
Yeah,
from what you
absolutely.
found out.
Yeah, so it looks like I'm going over to Brad Friedman. Brad Friedman is my favorite guy who covers tech earnings, and he puts out one pagers for pretty much every earnings report. I see he put out Meta. I'm not seeing Qualcomm from him, so I'm gonna have to pull that up elsewhere. But yeah, Qualcomm just reported after the bell, and the stock is up on the report. So let me just check real quick. This is actually the first day that you and I have covered a stock the day that it reports. So 8.39% is where it's at after hours. This is also, I think, the first time that we've done a show on a day when the Fed, I mean, this is a big day, right? Fed had a meeting and I thought it was pretty dovish, and stocks rallied even before Jerome Powell started talking, and then rallied through his talk. And of course, now we've got Qualcomm earnings, which we scheduled a while ago. This is actually an accident, by the way. I didn't mean to schedule it on the day. Actually, I think
I
we're
did.
scheduled for tomorrow. Yeah, you wanted to
Well,
report
I
today.
did.
So really
I
a coincidence.
hypothetically pushed you out, James. I came up with the whole ruse just so that we could talk about Qualcomm after the earnings call. Surprise. I hope you enjoyed that decision of mine. But let's just start real quick. A lot of fireworks this week. I was a little surprised as well. Microsoft, one of the earnings week kicked off with Microsoft, and I thought, oh boy, when Microsoft had, sniffed a little bit of their cloud. I think it was their cloud revenue that was a miss. I thought, oh, here we go. But I think the market is just looking for, these tech stocks are just looking for a reason to come back. And now it's almost 100% certainty. I mean, almost nothing in life is 100% certainty, but it's a very high likelihood that we're going to get a rate cut, at least in September. So what does Qualcomm do? Where does Qualcomm fit in regards to artificial intelligence? And let's just start with those two things.
Yeah, Qualcomm historically has been one of the largest manufacturers of modems, or you could call that also baseband chips. So when I say modem or baseband chips, think 3G, 4G, 5G. And actually, you'll notice on your phone a lot of the time that it'll switch between 5G and 4G or 3G, depending on where you are and what coverage you have. So Qualcomm specializes in chips that provide a single band like 5G, but they also specialize in chips that provide multi-band or multimodal that can switch between 3G, 4G, and 5G. And not only do they supply those chips in every single iPhone, they also supply most Samsung phones. Now, they make royalties. So one of the things that's controversial about Qualcomm is they make a certain amount of money based off of the sale price of the phone, which is crazy. So I think this goes back in time, but the more that a manufacturer like Apple charges for a phone, the more that Qualcomm makes from each phone sold because they take a percentage of the full price of the phone. I mean, there have been lawsuits and even the US government has sued them on this practice, but they've pretty much won the lawsuits, or rather, they lost one and it was overturned. So, yeah, they're making 3.2% on modems that are only 5G. They make a little bit less on the multimodals, the ones that switch between 3G, 4G, 5G, but overall they make about a 2.5% royalty rate on these baseband modem chips. So that's one of their big things, but it's not their only thing. They're also jumping into automotive and also CPUs, especially AI CPUs.
Something we use in everyday life. I mean, you think of Qualcomm, you think of really sort of the networking effect of the build out of just 5G phones, computers. Also, licensing. Qualcomm makes a pretty good, but their net profit margin, their price of sales, all that is really good. So please explain to me. One of the things looking to sort of the macro picture of Qualcomm, we saw really good EPS, good revenue growth over years, but then in the last 2 to 3 years, we've seen a different story up until recently. So what led to that decline? Could you explain that to me over the last few years?
Yeah, I think the first thing to look at is just iPhone sales. So iPhone sales have slowed down. When the iPhone 15 came out, there was a big boost in Qualcomm's revenue for that, or rather, when they were manufacturing the iPhone 15, Qualcomm is making money from all of that, manufacturing the chips going into the phones. And then, iPhone 15 was, I want to say, about a year ago it was released, and so things have kind of slowed down. It's like 4 quarters ago that things have kind of slown down since then. So revenue comps are largely dependent on iPhone sales. So year over year revenue has been down recently since iPhone 15 sales have slowed down. Obviously, we have iPhone 16 coming up very soon. But there are other things too, like automotive. So they've been trying to get into automotive chips. Well, automotive has slowed down since interest rates have been higher, and we're hoping for a pickup in automotive also. So PCs have been slow, and they do actually PC chips now too. So PCs have been slow. They're really big in XR and VR headsets. Like if you own a Meta Quest headset, you have a Qualcomm Snapdragon chip in that headset, but that's a small part of overall chips sold. I mean, you and I have the Meta Quest, but not everybody has one of those headsets. So I would say there's some like cyclicality in their order flow and their revenue. But as far as things are looking for the near future, it looks pretty good.
Well, yeah. So when you think of Qualcomm, my understanding is sort of think of chip designers, chips that go in sort of everyday use items that we deal with on a regular basis, which isn't directly tied to artificial intelligence. However, explain to me really how Qualcomm may benefit from AI.
So Qualcomm is trying to be an AI company, and not in a hype kind of a way. So they, on their earnings call, which I was lucky to find it today because I missed it while it was live, but I found somebody who had just live streamed it, and I was able to jump in and listen to it at the end of the live stream and back it up. So I heard their whole earnings call today. And essentially what they're saying is they're trying to redesign all of their offerings for AI, which is exciting if you believe in AI, like I do. And in a few ways, they're focusing on it. So we already mentioned the XR and VR chips that they're the leader in. There's going to be a tie-in for AI. So everything from the Meta, what are they called? So Meta has glasses now. I want to almost say they're called Meta Ray-Bans, Meta Ray-Ban glasses, and that has Llama 3.1 in it, and it uses a Qualcomm chip. Now we already talked about the Meta Quest headsets that have a Qualcomm chip. So there's that. But look, their big thing is turning Microsoft computers into AI computers. And this is a lot, so try to catch it. Turning Microsoft computers into AI computers using an ARM designed chip that Qualcomm makes. So it's like a combined Qualcomm ARM design for Microsoft computers, for PCs, not Macs. We're not talking about Macs. We talked about ARM previously in relation to Mac, but now we're talking about Microsoft. They want to bring Microsoft into the ARM architecture instead of x86. x86 is the traditional Intel AMD type of chip that goes into Microsoft devices. Now Qualcomm is saying, no, let's work with ARM and design more battery conservative chips, more battery conserving chips for Microsoft devices. So that's their big AI push, is to bring out a new AI chip on ARM architecture for Windows computers.
Okay, yeah. So risk here to Qualcomm. So one of the things doing my research a little bit, talking about Qualcomm, and you and I, this is not one of the companies we've talked extensively about, but the the numbers look great. And Qualcomm, they've got great asset to liability. Just in general, the fundamentals of the company from a financial standpoint look great. Growth was an issue over the last 2 to 3 years. However, we're now seeing a return to that growth. We're looking at an EPS, sort of a top EPS for the year above 10 to 12. And right now, the forward PE of Qualcomm is around 14 and a half. And so one of the things, critiques that you and I have both had in covering some of these stocks was like, oh, yeah, great. We see futures for the stocks, great numbers. However, overvalued. I mean, you and I have talked about that as sort of, yes, we're buying, or no, we're buying. I can't remember a few times I've said, no, I'm not buying currently because I just think it's overvalued. Qualcomm is currently about $180 a share. It just had its earnings. It jumped about 88% after its earnings. What do you think for the year outlook in regards to Qualcomm? And what are the risks if you say, hey, I'm interested in investing in a company like Qualcomm right now?
Yeah, and that's actually a really important thing that you brought up, is this pullback that we've had. So during this pullback, we've been hated. We put out a series of short videos talking about different stocks. Each one is a 30-second recap. And we say whether or not we're buying or selling it. Not financial advice, it's whether or not we're buying or selling it. One of those videos was about Meta, and it was both of us saying that we're buying Meta, and it got 8 dislikes. 3 likes and 8 dislikes on a day when AI stocks were crashing. And that makes sense. People are upset, but you shouldn't be upset. You should be watching and waiting and planning to pull the trigger and starting to pull the trigger, which is what I was doing. I've been pulling the trigger for the past weeks. Now, I wrote you this message earlier this week. I said, just to bring you up to speed, the NASDAQ has now pulled back 8.3% from its recent high. That's more than March's pullback, which was 7%, and less than last October's pullback, which was 12% total. Okay, now I heard someone say on CNBC that the mega cap tech companies have actually pulled back 15%. So that's a huge pullback. So yesterday, people should have been buying. We had this negative 1.3% day on the NASDAQ, and it did a little puke down to 2%. Either one was a good opportunity. Negative 1.3% on top of the already 8.3% pullback that we had, with a puke even further. We're talking about 10% pullback there. In a bull market, you only get so much of a pullback. We're still in an upward sloping trend right now. So obviously you asked me about Qualcomm, not about all of that, but yeah, Qualcomm has pulled back. Everything has pulled
So
back.
what do you expect for the year in regards to Qualcomm? Here's what I would say is, the story has been yet to be told. Meta also reported earnings and it's up like 5% after the bell. We'll see what tomorrow holds, but Meta's numbers were really good. We both decided to buy Meta because after the last earnings call, despite good earnings, uh, on their earnings call, good numbers, Meta was basically, I thought, one of the stocks that was actually undervalued. I mean, my price target with Meta was way above 500. And so I have a large position in Meta, full disclosure. Do not have a position in Qualcomm. However, in a lot of these companies, I was trying to wait for a time to go back in because we both predicted. I mean, we both were talking about this. We both said, hey, the growth, or not the growth, but the stock prices can't continue. We can't see these sort of things to continue. And the one thing I would say is that one of the things that didn't concern me about this pullback is, especially, let's just look at a stock like Nvidia or then the SMH, the ETF for chips, is that the money didn't go anywhere. We didn't see a broad sell off. The RSP, the equal weighted indexes, actually the IWM broke out. We saw basically a shifting in money into low cap, mid cap, and more broad into the market. It wasn't just, oh my gosh, the money's leaving the market. The VIX was going up. And I think some people were just taking profits out of big tech prior to earnings. And right now, we're going to see what happens. Meta's numbers looked very strong, very strong. Qualcomm's numbers were really good. And I think one of the things that helped this week was AMD's numbers. So let's just see what happens tomorrow. We've got Apple and Amazon on deck. But people were just, I think the VIX was up and people were a little worried. We weren't, you and I were not worried at all. Please don't take why we're going through these companies as a time to say, oh, let's go and buy. James and I have our own personal decisions of when we do that. However, we're going through these companies, so we're going to give you strong ideas to put on your watch list so that you can decide for the right time on when to buy them. And that's your own personal decision. I think you can make that decision on your own. Qualcomm as a company, forward PE 14 and a half and current PE around 22, correct? So we're below the 50-day moving average. We're above the 200-day moving average. Me particularly, I'm currently a buyer of Qualcomm because I think that after this last earnings call, we've seen a breakout, and Qualcomm, I think, is at a discount. My price target for Qualcomm is over 250. So I'm personally a buyer of Qualcomm because of revenue growth, and it's currently at a discount. What about you?
Yeah. So a lot of things you said there. Qualcomm, first of all, just to read out their earnings, and then I'll give you my take on what I'm doing with Qualcomm. But so earnings report announced today, estimated 2.24. So estimated $2.24 per share. Actual was $2.33 per share. So good beat there on EPS. On the top line, revenue estimate was 9.21 billion. Actual was 9.39 billion. And they raised guidance. So the market really wants to see that raise, not just the beat, but the raise of what's going to happen in the future. So I think the stock is up because of the raise, not the beat.
When you
But
have a net profit margin, James, of 20 to 30% and an actual EPS, I mean, even the high end number for the year is around 10. I think that that's pretty soft. So a 10 EPS for the year with a 20 of PE, that's around 200. My price target for Qualcomm, I'm just going to say it now, is 250 before year's end. What about you?
so, I mean, I just couldn't agree more. Look, this stock peaked at 230. It's going back to 230. This stock could double. This stock could double over the next year. It could double over the next year. They are trying to be an AI chip company, AI edge chip company. So small chips that go in mobile devices for AI. That's what they're focusing on. If AI is real, this stock is real. If AI is real, this stock doubles. Now, it might double in a year and a half. I don't know. We might have a pullback. And actually, one thing I should preface before I give you my final take on Qualcomm is that this pullback isn't necessarily over. It's been as low as I would expect it to be. So it's possible that we're getting towards the bottom of the range. But as far as time, it's not necessarily over. If you look at the prior two pullbacks I mentioned, March and last October, they both went on longer, especially the October one. October, we really dragged the bottom of the lake. You know, it's like an anchor dragging on the bottom of the lake for a little while there last October. So the pullback isn't necessarily over. A lot of people understand that. But look at this forward PE of 14. I mean, really? Forward PE of 14? And I don't even know if this has been updated for earnings yet. That's
It
ridiculous.
hasn't, but the thing is, this was back from last earnings, and this was Q3, so Q2, correct? So the the price target for Qualcomm, regardless of whether we see the complete build out with AI, the risk I see with Qualcomm potentially in regards to revenue growth is that some of these cycles in regards to phone cycles or computer cycles don't bear the fruit that is expected of them. That is the one risk I see of Qualcomm. I don't see other geopolitical risks. I don't see necessarily even an AI risk somewhat. I think somewhat of the fear in regards to market sentiment may hurt Qualcomm depending on what happens over the next year. However, I will say that I just think that EPS is going to be on the high end of 10 and with a PE of around 14, or even if you put a PE of 20, you're talking over 200. I think that it's a very plausible scenario that Qualcomm goes over 250 before a year's end. I think you and I both agree on that. So let me give you so that's my biggest risk to Qualcomm is that over the next few quarters, we don't see in the Q3, Q4, that we don't see some of the cycles bearing fruit. That is cell phone cycle, computer cycle, chip cycles kind of basically causing revenue growth. What's your biggest concern for Qualcomm?
Yeah, so I'll give you my biggest concern, but let me give you my final take on it first. So I am buying Qualcomm because it's redefining itself as an AI edge chip company and because it's too overvalued with this pullback. As far as
Undervalued.
yeah, I messed up. I had just a perfect sound bite there. So let me try it again. I am buying Qualcomm because it's redefining itself as an AI edge chip company and because it's undervalued with this pullback. Now, my take on what's as far as what the risks are, I just think it's a small risk, but they do a lot of business with China. Now, keep in mind, the US government has been trying to curtail GPUs to China, and Qualcomm doesn't sell GPUs. They don't sell GPUs to China. So they were apparently so Huawei, Huawei, is the biggest tech company in China. And supposedly, well, not supposedly, what they said on their call was that their license to sell to Huawei was just revoked. Now, what they didn't say on the call was whether the US government revoked it or the Chinese government revoked it, but I kind of get the impression that the Chinese government revoked the license. So, unfortunately, they can't sell to Huawei anymore. And they are still selling to other Chinese tech companies, but there's some China risk there. I just don't think that's the majority of their revenue, but there is some China risk there. Maybe 1, 2, 3, 4%. I don't know. Some percent of the revenue
Well,
goes to China.
Well, and the reason why, I mean, I can restate it again. I mean, I'm buying Qualcomm because of the current price Qualcomm's at, the potential for revenue growth, and the return on investment, which I expect to be around 30 to 40% for the year. That's it. And so the PDE on Qualcomm is very good. I love the 2% dividend too. I mean, any stock that has a dividend has always got a little nice little place in my heart just to be able to get that money. It sort of de-risks for me. It's like, you can put your money in a money market fund and make 5%, 4.5 to 5.5%, 2% with the potential to make 30 to 40% return APY for the year. I like that, James. I like it a lot.
Yeah, it's nice to, I mean, I never look at the dividend because, yes, well, sort of in certain cases I do. Like I do own certain dividend ETFs, but we're talking 9% dividend. When it comes to a tech company, I typically don't look at the dividend because tech companies are more volatile and you can lose so much more than the percentage dividend that you're getting per year. But it is nice to see it pop up on your phone and see that you
The
just made
cherry on top.
$2.
Cherry on top.
Hey,
There's
just
a
got
little cherry on
$20. Or
top.
hey, just got $15.
$2.
Hey, it's nice. Free
Well, it depends
$15.
on how big of a position you have in Qualcomm. So, yeah, I mean, this is something that potentially, don't take it as investment advice, but I will probably keep in a larger portion of my portfolio. I don't, like I said, don't current own any, but maybe in the next quarter we'll talk about going into earnings what my position in Qualcomm is. So, interesting kind of this week the Fed didn't really say anything. We have on deck Amazon and Apple, and I really think that when Microsoft and Meta, now Qualcomm, now AMD came out with their numbers, I really think that money's going to start flowing back into tech because the revenue growth is going to be there, and kind of it tells the tale of what's about to happen.
Yeah, I heard a lot of different stories for this pullback. Oh, it's summer. People are on vacation. They want to step away from their computer. They want to take profits, so on and so forth. And also, apparently, this month and the next, well, we're not in August yet, but apparently the next few months are normally a little more rocky for the stock market. Now, the one thing I will say is just look at the chart. We're in a confirmed uptrend. We're in a confirmed bull market. This is a pullback in a bull market. It is not the beginning of a bear market. Everything in the economy is strong. GDP stronger than expected. Unemployment is still okay. It's gone up a little bit, but historically it's still low and inflation has come down. So everything is good. You don't need to freak out just because stocks were a little overblown and they've pulled back a bit. So what I've heard, and I want to just use this as my guide, if you're in an uptrend, the economy is healthy, you just hold your stocks, you just keep investing until the labor market breaks. That's what you watch for. You watch and you wait for the labor market to break, for unemployment to start going up precipitously, for job growth to start going down. That's when companies are telling you they need to somehow maintain their earnings despite declining revenue. So they're cutting jobs. And then when those jobs get cut, people can't spend. There's a cyclical effect and things start to spiral downwards. We're not there. We're not even close. And on the call today with Fed Chair Jerome Powell, he did actually say they're probably going to cut at the next meeting. I mean, it was like super dovish. It was like, yeah, we're probably going to cut next meeting. So we just don't know how much they're going to cut, how many times they're going to cut. That's what we don't know. We just don't know that. Yeah.
Yeah, I don't know. And Everybody has their own style, especially going into earnings or in general how they like to do things. And so, my potential style is a little de-risking prior to this earnings season, especially with the growth that we've seen from just the Nasdaq or QQQ or QQEW. The amount of growth we saw is sort of like, hey, let me move my money into some of these little safer, maybe different type of plays. I mean, one of Warren Buffett's Berkshire Hathaway invested largely in a Chubb, and I moved some of my money, and I like the company's numbers, UNH. I mean, I've moved some in my money into oil and gas, for example. I took a large position out of Apple, and just to de-risk. And this is a good time. We're not saying the money is flowing back into tech right now. I don't want some of our listeners to just go all in on tech because this is
No
just
one
sort of right
listens to us.
now.
It's okay.
Well, yeah, I mean, 8% pullback or 10% pullback is a lot. I mean, my point is that go where the river flows, go where the where the money is going. Look at the different sectors, make sure that you're going along with the sector. But however, tech stocks, AI plays, many of the stocks we've covered in this podcast are actually at discounts right now. So that may be something to watch very, very closely. TSM, for an example, ASML, we've covered that one on this. And so,
Yeah,
yeah.
so I'm showing these options. So what I typically do, I wait for things to pull back, and I wait for them to pull back a certain amount. And the more they pull back, the more bullish I get because I'm getting a lower cost basis. So usually I will start with just buying stock, and that's what I've been doing over the last week or two. And then if a pullback gets to a certain point, I want to take on leverage. I want to take more risk, and I'll do either options or I'll do levered ETFs. So there's only so many leveraged ETFs. There's like the big tech companies, Tesla, Nvidia, Microsoft, they all have 2x, some of them have 3x leveraged ETFs. But options is another way. So options is a little trickier because options expire at a certain point, so they're time dated. You only have so much time for that trade to work out. Whereas with a leveraged ETF, like a 2x Tesla long leveraged ETF, which might be TSLR if I'm remembering correctly, there's no time limit on that. You can just hold it forever and you'll make twice as much the gain. So if Tesla goes up 5% in a month, you make 10%. So I'm showing on the screen these options trades I put on yesterday. You can see they're all way up today. And what I typically start with on options, I will start by buying options. I see buying options as a little bit safer than selling options. And I buy spreads. I do everything with spreads. I don't do covered calls or cash secured puts like you do, Kai. But you can see I bought all of these spreads. These are all calls. Essentially, I bought calls, but they're call spreads, which is a little bit cheaper. And you can see they're all way up today. Now, they could be down tomorrow. They could be down a week from now, but I decided not to close today. So I'm going to hold a little bit longer just to see kind of where things go here. But yeah, this is 1 day profit, pretty significant 1 day profit in these call spreads I bought yesterday. When it was, I didn't get the full puke. I didn't get it at the 2% drop yesterday. I got it at the 1.3% drop yesterday, but I still got in at a good point for these calls. So, people, like I said, Kai, sometimes people say amateur investors, this and that. But to be honest, we looked at your mnemonic for the year. And then a couple days later, I went to this investing competition website. They have this international investing competition. You beat the winner of the global investing competition. Your acronym, which you just put together for fun, beat the winner of the global stock investing competition. So he was at like 50%. I think you were above 50%, if I remember correctly. So,
Well, and
we can
I
be
will
amateur
toot my
investors, but
horn.
we're winning. We're winning.
Well, the thing is that's the whole point. Is sometimes even it's sort of like the same thing. Like, let's look at, for example, we're getting off topic a little bit. I have positions in McDonald's and Starbucks, right? You and I have talked about this multiple times, and I went ahead and invested in McDonald's and Starbucks, not because of an AI play, but because of the value of those companies in regards to what I thought their true value was. There's a big pullback. They both posted earnings this week, right? Not great numbers. Both revenue miss, both EPS. I think both EPS misses, but yet both were up 3 to 4% this week. So sometimes it's hard, even for the profession. My point with making that point and learning from even me, from our listeners out there, is sometimes the experts don't know. And you'll listen to a few of the experts and they won't trade earnings either because it's very difficult to predict. However, you can go use the numbers and then decide when the appropriate value is of an underlying stock. or equity is, and then decide to pull the trigger when you feel comfortable, depending on your risk tolerance.
Yeah. So what I'll close with, a couple weeks ago on Fast Money, they had the entire Big Short team on there. So like the real guys who shorted subprime mortgages. They were there at the beginning of the subprime mortgage crisis. The people who were depicted in the movie The Big Short, they were all there on Fast Money a couple weeks ago. And essentially, they beat the market without owning any AI stocks. And the way they beat the market without owning any AI stocks this year was by doing extremely close research on companies that no one else is looking at. So it's their depth of research that made the difference. And they're buying things like shipping companies. One of them, I think you would love this. One of them, I think, mentioned a railroad company. So they're going deep and they're jumping into things.
It's just, yeah, I had a large position in railroads. James makes fun of me a little bit because James, we're both very into researching and going over these companies in regards to AI and want to share the information we learn, also share some things and how we make money. But yeah, this is what's the beauty of doing this. I mean, the beauty of the internet is that all of this information is out there. I mean, they're publicly traded companies. They have to report their numbers every quarter. And so you can go into those reports, you can read the Morningstar reports, you can do the financial analysis for yourself. And Qualcomm is, that's one of the beauties of why we're doing this. We're giving that idea for those out there. I mean, forward PE of 14.6. Now we'll see what happens, but
Yeah. Last thing I'll say, one of my favorite podcasts is Chip Stock Investor. It's just two people like us. They're not professionals, but if you listen to the stocks that they say that they're buying over the last 6 months, they have made filthy amounts of money. I mean, they were even in on this organ transplant company, Transmedics, I think it's called, like 4 months ago, 5 months ago, even longer. They've made filthy amounts of money, hundreds of percentages because of their deep research into chip stocks. I'll leave it there. Do your own research. There's a lot of people looking into different stocks. There's a chip recovery going on. We're still in a bull market. Make some money, people. Thanks for
make some
tuning into our
money.
show. You
Heck
please
yeah.
give us a like or comment, and we'll be back in the next episode to cover more AI stocks. You can find all our holdings and trades at investingintel.ai. Thanks so much, Kai.
Thanks, James.